Good evening, ladies and gentlemen. Thank you for joining us this evening for this webinar. I would like right now to introduce our speaker for tonight, Mr. Jean-Paul Wong, who is the General Manager of FSM1.com. Tonight, he will be sharing with us about FSM1.com, the features and tools available to you to help you in your investing journey. So with that, I'll hand the time over to Mr. Jean-Paul Wong.
Thank you, Jonathan. And good evening to all of you, ladies and gentlemen, for joining me and my team tonight for this webinar. So the title is Starting Your Investment Journey with FSM1. So I hope that I'll be able to share the various features that we have on the platform and how you can get started in terms of using our services and our platform. Before I begin, I just want to also share that as what Jonathan mentioned, you can actually share or ask your questions in a Q&A function in the Zoom in the Zoom webinar. So feel free to along the way as I present to ask your questions as well. So without further ado, I'll start. So tonight, I'll be running through some of the features on FSM1 in terms of the products. So it's a bit of stocks and ETFs firstly, and also bonds, unit trusts, the managed portfolios that we have, the cash solutions. We also have services like insurance, estate planning services as well. And I'll wrap up with the research ideas and the features as well as the tools that we have on the platform. So before I begin, I'll just do a quick introduction about who we are, FSM1.com. So we started in the year 2000 as Fundsupermart, and Fundsupermart is the B2C or the business to consumers division of iFAST Financial. So iFAST Financial's parent company is of course iFAST Corporation, which is listed on the SGX main board since 2014. We're also in various other markets like Hong Kong, Malaysia, and China as well. Along the way, over the years, in the last 20 years, we've launched new services. So I think the highlight for us is the launch of our stockbroking services in the year 2016 and 2017, when we launched Hong Kong Exchange and we introduced Singapore Exchange as well as US stockbroking services for our investors. We also introduced bond services, for example, the Bond Express, which I will share a little bit more later, as well as the managed portfolios. Today, as at the latest results at the iFAST Corp level, which is the listed company level, so our group's AUA, which is including all the markets that we're in, we have risen to 10 billion Sing dollars as at 23rd April. We've also, of course, at the group level, applied for a digital wholesale bank license. So, of course, that's pending the regulator's decision. So that was end of last year. So our mission statement is to help investors around the world invest globally and profitably. So it's something that we have in terms of how it guides us, in terms of how we do business, in terms of how we think of new services for our clients. So you'll probably find that during tonight's webinar, there's quite a bit of references from me on some of the investment ideas that hopefully can be of use to you. So in terms of the services, I've run through some of these points just now. So let me just begin. So FSM1 is essentially the rebranding, a new name for the previous platform's name, which is Fundsupermart. But Fundsupermart was a name that we started with in the year 2000. But it's a name that gives you an idea about who we are, which is a supermarket of funds or unit trusts. But in the last 3 to 4 years, we've added more services, which is why we wanted to call ourselves FSM, short for Fundsupermart, and One, because under one roof, you can actually have access to various products like stocks, bonds, funds and ETFs as well, insurance, and so on. So I will start with the stocks and ETFs part for our investors. So today on FSM1, you can have access to Singapore, US, as well as the Hong Kong stock markets. So essentially 3 main exchanges. And in terms of the pricing is at 0.08%, subject to various minimum charges depending on the exchange. So if it's for SGX, it's Sing dollars 10. For US is 880, and for Hong Kong it's a minimum of 50 Hong Kong dollars. We also have a feature for us on FSM1 for clients who have assets with us of 100K and above. And this feature is essentially a flat permanent fee of $10 for SGX trading only. So it's for clients that we call silver, gold, and diamond. So silver is with assets of 100K and above, gold is 200K and above, and for diamond is 500K and above. So if SGX stocks and ETFs if these are something that you're interested in to invest into, well, the good thing, if you are a silver client above, then it's a permanent flat fee of $10, irrespective of the investment amount that you put in. So in terms of trading and into stocks and ETFs on FSM, our account, it's a pre-funded account. So you need to have cash first on the platform with us before you can start trading. But you don't need to open a CDP account because iFast is the custodian in this case. So basically, 3 steps: fund your cash account with us, and convert your currency if you need to. If you want to convert to, let's say, US dollars, if you are looking to trade into the US exchange, for example. And step 3, of course, is to go straight to live trading and get started in your stockbroking experience with us. Another interesting feature that we offer to clients and investors on our platform is the CDP account linkage. So even though you don't need to open an account with CDP to get started, in terms of your SGX trading, you can actually link your existing CDP account to FSM1. And the benefit of doing that is, of course, you can enjoy the lower commission rates that I mentioned just now, including, the flat Sing dollars, $10, which is of course applicable to silver clients and above. So of course, I mentioned a bit about the pre-funding part in terms of the stock broking experience. So just one slide here to kickstart this cash solutions part. So making payment to FSM1, it's pretty straightforward. You can do it via fast transfer. You can pay now as well. Of course, internet banking is also available for you. But of course, with fast and pay now nowadays, you can actually do a very quick transfer from your bank account to us, and there are various instructions and steps on our website, which I have screen grabs of here, in terms of how you can actually do that transfer. So for most of the local banks, if you have an account with them and you transfer your money to us, you'll be able to actually get a notification once you have made a transfer to the FSM cash account. I have a little bit more about the cash solutions and the various options later on in my slides. So just to move on further on the stocks and ETFs part. So ETF, I think it's an investment product that a lot of investors are interested in recent years. So ETF is essentially a basket of securities. It's passively managed usually, and it replicates an underlying index. On our platform today, you have more than 2,200 ETFs in terms of options for you to invest into. So what we wanted to do from our research team is to actually make it a bit easier for our investors to zoom in into something. So we have the ETF focus list, that's what we call it. And this ETF focus list essentially narrows down your search in terms of some of the interesting ETFs that you can look at. And essentially, you're looking at about 45 ETFs in this ETF focus list. And our research team just updated this ETF focus list. We tend to update it every year. So we just did it this month. And my colleague Feline from the research team, in fact, was sharing and presenting yesterday night to investors about some of the changes that you can see in this year's ETF focus list compared to last year's. So of course, in terms of the various factors and in terms of the metrics that our research team uses to determine what makes it into the ETF focus list, you have the quantitative factors, which will include things like expense ratios, tracking error, your liquidity, as well as your AUM, and the qualitative factors as well, whether it's a physical, synthetic kind of a structure for the ETF, as well as the choice of the indices. So I have a screen grab here in terms of where you can find the ETF focus list. So it's under the stocks and ETFs part, and you'll be able to see the ETF focus list essentially in this segment here. I'll be talking quite a bit about some of the strategies that as an investor we can make use of to get started. And one of the strategies that I found to be really useful over time is the regular savings plan. I'll go more into this point later on. But essentially today you can actually start a regular savings plan into ETFs as well as other products. But in this case ETF, you can start from just 50 Sing dollars a month, and you can choose from about 49 ETFs to get started in your RSP journey, and subject to these fees, which is minimum of 0.08%. But for RSP, we actually have a lower minimum of just 1 Sing dollars, for example, or 1 US dollars, or 5 Hong Kong dollars into various ETFs. So of course, there are quite a number of choices, 49 of them. I'll run a little bit more into what kind of options you have here. So for example, you will find on this slide, you'll find that there are 6 main categories of ETFs here, which is between, core equity, fixed income, regional equity, single markets, commodities, and tactical plays. So in this case, I've just zoomed in as an example on tactical plays. So these are some of the tactical ideas that we have. China financials, China healthcare, China tech, China banks. But of course, a lot of the tech related sectors have been of greater interest in recent years for our investors, including cloud computing as well, because of all the trends towards 5G and so on, and global healthcare, REITs as well. So you'll find that these are some of the ETFs that our research team has shortlisted, and that you can look into if you're looking to start trading, or if you want to start with an RSP. The other feature that you can make use of on our platform is to go into the various ETFs fact sheet pages, and then you'll find that as you scroll down the fact sheet page, you'll find that there are the top 25 holdings for you to see. And in this case, I just used 2 examples. One is from the US market, which is the S&P 500 ETF from Vanguard. So it's in this year's ETF focus list. And the S&P 500, of course, is one way for you to get started. I think investors like Warren Buffett, he highlighted why investing in a passively managed index fund with a low cost, and in this case, he used the example of the S&P 500, which is 500 companies on the US market, as a very good starting point for investors. And of course, he has a certain bias, of course, towards why you should start with the US market. Obviously, for him as an American as well, but of course, it's with his bias towards why US is the home to a lot of the innovation that you see in the world. So of course, if you look at the top 25 holdings for the Vanguard S&P, you'll find, of course, the top companies that we're all familiar with, whether it's Microsoft, Apple, Amazon, and so on. The other example I use here, it's actually this Total China Index Fund ETF. So of course, in terms of the holdings, I think a lot of the names inside you'll be familiar with as well, be it Alibaba, Tencent, China Construction Bank, Ping An, and so on. So I talked quite a bit about the ETF focus list, and we came up with a new list again this year in May. So of course, in line with this annual update of the ETF focus list, what we have also been doing is from 18 May to 12 June, just a short period of time, we have a flat fee, $10 for all investors if you're interested to invest in these selected 6 SGS listed ETFs that are in the ETF focus list. So they include the iShares India ETF, the Spider Straits Times. If you're looking into REITs, there's the Nikko Asian REITs ETF, as well as some other ETFs. My colleague Dejun, who's from our research team covering stocks and ETFs, he'll be doing a webinar next Wednesday evening at 7 o'clock. So, if you're looking to understand more about some of these exciting ETFs that are invested very specifically in this instance on the digital economy, you can actually join in, register your interest, later on. So of course, some of the other features that you can expect as an investor on our platform is you can manage the corporate actions for your stocks. You can, log in, submit your application online if you're interested to get, notices on rights issues, notices on the AGMs of the companies, for example. And of course, there will be a confirmation email that you'll receive from us after you have expressed your interest, in the various companies, let's say AGMs or AGMs. The other feature that we have on the platform is if you're looking to sign up for, IPOs, share placements as well, we do have that. But of course, in this case, it's only for accredited investors. So that comes with certain restrictions, from the authorities. So typically, there are various criteria, like you have to invest, you have to meet the criteria for accredited investor. And of course, if you have a certain amount of money, like at least 200K and above, you can also, of course, express your interest to invest into some of these share placements as well. So you can sign up for all these various placements and IPO in terms of the alerts on our website. If you're interested in various stocks, in this case, we have the example of DPS, for example. You can add to your watch list. You can also, of course, set price alerts and so on, so that you get notifications, whether it's from from your mobile app or even from the website if you're logged in, or by email if the various price triggers that you set have been met. So some other features that we have on our platform for investors for stocks and ETFs. So one feature here that I shared is actually the most watched by FSM clients in live trading. So in live trading, right, you can add in the various stocks and ETFs that you like into your watch list. But if you are interested to also find out maybe what other investors are also doing on FSM, you can actually check out this feature that we have in live trading. You'll be able to see the 30 stocks and ETFs that our other clients are also most watching in this instance, and you can sort by the exchanges, Singapore, Hong Kong, US. So in this instance, I did a screen grab of SGX. So of course, maybe not a great surprise to you. So a lot of investors we're interested or we're watching, and we have these stocks in our watch list. The top stocks are like DBS, OCBC, UOB, SIA, Singtel, and so on. iFAST as well happens to show up here. The other idea that we have, that I have on this slide, is the stocks thematic portfolios. So if you go to our stocks segment on our website, you'll be able to look at some of the thematic portfolios that our research team has created. So these are some of the thematic portfolios that they identified, which they think are long-term mega trends that will transform the way we invest. And it's something that could be of interest to you if you're looking at, let's say, the digitalization of consumption. Maybe you can see what are some of the stocks that our research team has highlighted in the various thematic portfolios. Later on, I'll try to maybe run through as well on our website some of these features so that it's easier for you to see as I maybe navigate through the website as opposed to just looking at it at my presentation deck. So I wrapped up quite a bit about stocks and ETFs in terms of some of the key features, some of the tools that you could make use of. So I'll just move on quite briefly into the next product, which is bonds. So of course, bonds is essentially it's corporations, but also of course governments. So in this case, if it's governments, it's sovereign bonds. If it's companies, then it's corporate bonds. They're essentially asking to borrow money from us, the investors, and of course in return they will give us a certain amount of interest that they call the coupon rate. And this coupon rate, of course, it's a set at this. You'll see in the name of the bond. And assuming there's no defaults, of course, and there's no credit risk, therefore, we will get, upon maturity, the principal amount that we have invested. So there are various bonds that you can have access to on fsm1.com. So you have the retail bonds, which typically starts from $1,000 and above. the issue, I guess, for retail bonds is that there are not too many retail bonds available on the exchange in Singapore. So in terms of choices, there's not that many investment choices for retail bonds for us in Singapore. The other kind of bonds that you could look at is the Singapore government securities that also starts typically from $1,000 and above. And the third type of a bond is the wholesale corporate bonds. But of course, wholesale corporate bonds, the constraint is the investment amount, which is from $250,000 and above. So it's a fairly high threshold in terms of getting into these bonds, which is why the fourth category here that we have launched about 3-4 years ago, it's the Bond Express. So we launched it December 2016. We call it Bond Express, and it's really exclusive to FSM. It's very unique in the Singapore market. We have broken down some corporate bonds, not all the corporate bonds that we offer, but just some. We're talking about, let's say, 30 plus corporate bonds, and we have broken down the investment amount from 250K into a much more, a smaller sum from $5,000 and above. Of course, the thing here, the constraint here is for investors who are accredited investors only, then they can have access to the Bond Express bonds. So essentially, on the next slide, this is what I have shared. Why we wanted to do this for investors is because we also know that 250K for one corporate bond is quite hard to diversify your bond portfolio. So we felt that if we could, we will break down about 30 plus corporate bonds that we have and make it a lot more accessible for investors, as long as they're accredited investors, of course. So similar to some of the alerts that we offer to investors for stocks, we also have some of these alerts for bonds. So for bonds, of course, there are always some new bond issues, meaning there are some companies that are coming into the market are looking to raise money by issuing bonds. So these are the new bond issues, and if you are very interested in some of these new bond issues available in the market, you can actually subscribe to these alerts that we have on our website, so that you are made aware by SMS or email about these new bond issues, and you can, of course, look into whether you're interested to subscribe for these new bond issues. So in terms of the bond information that you'll see on our website, so in this case, we use an example, which is the Singapore Airlines bond. In terms of the naming, sometimes the bond names can be a little bit tricky, a little bit more complicated, but essentially it starts with the ticker, followed by the annual coupon rate, which is the so-called interest rate that the companies are seeking to give out to us as an investor. But of course, this so-called yield, the so-called interest rate that we earn from the companies or that we receive from the companies will change depending on the price that we buy into the bond. The other information that you see in the name in this case is the maturity date. So in this example, it shows 25th October 2023. So that's the maturity date, assuming the company doesn't default. So at the maturity date, we'll get back the investment amount that we have put into this bond. And you also see, of course, the bond type as well as the currency. So of course, in this case, we're talking about a Sing dollar bond. But of course, not all Singapore companies that go into the market with bond issuances are raising money in Sing dollar. Of course, there are other examples like DBS. They could come into the market with USD kind of bonds as well. The other information, of course, that is important for us as an investor is, you'll be looking at the ask and the bid. So if you're looking to buy, then you'll be looking at the ask price. And of course, when you look at the ask price, you'll be seeing the ask yield to maturity, which is the coupon rate, but adjusted for the price that you're going into or you're buying into. And of course, on the other side of the picture, if you're looking to sell, then you'll be looking at the bid side of it. The other information you see on our website, right, for investors is whether you're a stable income, whether you're a high yield seeker. We also put that information on the bond page for you, so you also know whether it's a fairly safer type of bond, or maybe it's a more investment grade type of bond, as opposed to, let's say, whether it's a more high yield kind of bond, which comes with, of course, higher risk. If you're very interested in bonds, of course, we have other tools that you can definitely make use of, like the bond calculator, the bond information, in terms of how you can make your decision. So if you're looking to start your investment journey with us via bonds, so you can actually request for quote, and that allows you to connect directly with our dealers team to actually check on the price, the liquidity of the bond, and of course you can also add to cart where you can start to then trade into the bonds. So we have a lot of bonds on the platform. We have a few hundred bonds, and these are just some of the companies or corporate bonds that we have on the platform. So of course, some of them you're familiar with. Some of the names are your more investment grade, your more, let's say, your more blue chip type of companies, and of course there are also some that are a bit more higher risk. So for example, if you're looking at Chinese properties listed on, let's say, in Hong Kong, so you have your Evergrande group, for example. If you're looking for something safer, of course, you have the likes of DBS, you have the likes of city developments, and so on. So we have a fixed income research team as well, similar to our team of stocks and ETFs covering the bonds. So just to wrap up a little bit on the bonds part, so similar to ETF focus list, we also wanted to create a feature for investors to zoom in. So in this case, we have the recommended bonds report. Our research team updates this report every 6 months typically, and you'll see some of the favorite bond ideas that we have for you. So I did a screen grab of the report. You can have access to it on our website free of charge. I also just shared a couple of banners that we have. So those are some of the articles that our research team has been writing on. So Oxley and Olam are just some of the examples. Of course, for us, the next product category is unit trust. So we started off as Fund Supermart, as I shared in the introduction. So this is the product that we started our platform business with, which is funds and unit trusts. And basically, it's a pool of investment money put together. So in some ways, it's in a way it's like an ETF. But of course, ETF is listed on an exchange. For unit trust, it's not listed. It's managed actively as opposed to, let's say, passively for an ETF. So unit trust is actively managed by the fund manager. It can invest into various sectors, into various investments, like equities, like bonds. These are some examples of the asset classes. It can be a combination of equities and bonds, which would then be a bit more like a balanced fund. It invests into many different countries, many different sectors, healthcare, technology, and so on. And of course, for this, usually fund managers will charge an annual management fee that tends to be, of course, higher than the annual management fees or the expense ratios that you see for ETFs. So for us, from the early days, even like about 20 years ago, 19 years ago, what we did was to actually have something that we thought would be useful for clients, which is the recommended funds report. And in this report, we have about 40 unit trusts that we have and we feature for investors in terms of what are the more interesting products in terms of how they outperform their peers. We look at it in two ways. First is the quantitative part, which is regarding the performance of the unit trust. We also look at the risk management part. Risk management meaning if there's a market, let's say during a market downturn, GFC is one example. How does unit trust perform versus the other unit trusts in the same category? So of course we would tend to favor those unit trusts which have been able to show our performances not only during good times but also during times where there were market downturns. So that's a bit of the risk management part explanation. We also of course look at the expense ratios, where of course those unit trusts with lower expense ratios would tend to be more favored on. There's also, of course, the qualitative factors. So one factor here could be the turnover of the fund managers. So I did a screen grab, so you can actually see the recommended funds feature under the funds part on our website. There's also a screen grab here. So if you go to this link, you'll be able to see the recommended funds on our website, and you'll be able to see it along the lines of core portfolio and the supplementary portfolio. So usually when we tell investors in terms of how they can get started in investing, we actually tell them that, you know, it's good to build a core portfolio, which is, let's say, 80% into various equity or bond funds. And then that's really like the backbone of your portfolio. That's why it's called a core portfolio. And a smaller proportion of your portfolio, let's say the supplementary part, can be, let's say, 20%, and that's into some of the more exciting tactical ideas. You know, it could be into technology, it can be into healthcare and so on. That's how we look a little bit into the core and supplementary portfolio concept. I'll run a little bit more on that on this point later on under my research portion of the presentation. So this is something that you can actually have access on our website free of charge as well. You can also have access to the full recommended funds report. So in terms of some of the tools that you can make use of, one of them is this fund selector that our investors tend to find very useful. So if you go into the fund selector tool under the funds part of our website, you'll be able to see that you can zoom in on various things. So for example, if you're looking at the Singapore equities and you're looking at only dividend paying funds, you can actually then generate the funds table based on these criteria. And they will show you then which are some of these funds, Singapore equity funds, that are dividend paying. And you can then sort out the annualized dividend yield as well, let's say from the highest dividend yield to the lowest. And in this case, in this example, of course, you'll find that the Nikko Singapore Dividend Fund, which is our recommended fund, which is why you find the R icon next to the name of the fund, that fund tends to have a better performance, let's say based on annualized 3-year performance versus its peers. And also, of course, in this example, it also has displayed had a higher annualized dividend yield rate versus its peers. So under the fund fact sheet, you'll be able to find a lot more information. So in this example, I have the First State Dividend Advantage, which is also a recommended fund of ours for many years in the Asian equity space. It's a fund that also tends to focus on the dividend part, and therefore it's invested into Asian companies that pay out dividends. It's managed by First State. And you can, of course, then find more information on this fund fact sheet page, whether it's in terms of the fund fact sheet information, whether it's in terms of the product highlight, you can see it there. You also can see the various logos here because this is one fund that has done well. You'll find the recommended fund logo here. It's also one of the top selling funds among our investors in the last 1 year. So you can also compare the performance of these funds versus its peers, versus the index as well, because we want to see whether it's done better, than the index. So in this example here, if you use the Chart Center tool, which is another tool of ours, and very graphically, very visually, you can actually see straight away that in the example that I just shared with you for Singapore equities, if you look at the Nikko Singapore Dividend Equity Fund versus the STI index, one question you may ask yourself is, why would I want to consider investing into a fund if I can also have access to the index? So of course, one main reason is because the fund must show outperformance versus the index. So in this case, not all the time for all sectors. So you can make use of our tools to see, which are the funds which have outperformed the indices. But in this very specific example, you'll find that the Nikko Singdiv equity fund, if you're looking at the annualized return over a longer period of time, let's say 3 years, or even in this example, 10 years, it's managed to actually demonstrate outperformance versus the index. So that would be one factor that I would say you should look into on whether I would want to consider, a unit trust. The next slide that I have here is still related to unit trust investing, but of course it's not from the payment method of cash, but it's for CPF. So for those of you who have CPF monies and you're looking to also invest your CPF monies to hopefully, of course, beat the 2.5% that we get from the CPF board on our OA account, right? So we actually came out with a CPF investing educational page. You can find it in my screen grab here. on the new to FSM, and you'll find it under services and CPF investment. We only launched it at the start of this year. And what we did was to come up with an educational portal with various partners from the fund houses to just highlight some of the interesting features, some of the interesting funds and educational articles you can look into. In this case, I have an example, which is for international or global equity fund. So in this case, I have the United Global Quality Growth Fund, which is a global equity fund from the UOB Asset Management fund house. So we have information from our research team on why this fund is interesting based on various metrics, and we also explain to you, what it focuses on, what it advances into, and the three criteria or metrics I shared with you just now: the performance, expense ratio, and risk. On these various levels, how do those firms, come out? Are they good on those various metrics? The other tool that you'll find perhaps very useful on the CPF section of our website is this dynamic portfolio builder. It's a good starting point, I would say, for investors, because whether you're a lump sum investor, meaning you have a sum of money already, let's say 8K, 10K and above in your CPF account, of course, before you start investing your CPF OA money, you need to have the minimum in the OA, which is 20K, and only above the 20K, then you can start to invest. So those are some of the requirements from CPF. But let's say you have something above the 20K in the ordinary account and you want to get started. So you can make use of this dynamic portfolio builder. You can look at, you can choose the various funds in the different regions: US, Asian equities, Japanese equities, and so on. Based on allocations that we have here, you can change the allocations, you can play with it, and it basically then shows you, the minimum investment amount and how much you need to get started if you want to build a global or globally diversified portfolio of funds using a CPF money. You can also use the same dynamic portfolio builder for regular savings plan if you're looking to, do a monthly investment using your CPF money. That's also possible. On this slide, what we have is, the investment advice part, because I guess on this part, there's a couple of things to take note of for us as investors. So one is, let's say, you have maybe something in mind already in terms of what you want to invest into, or maybe you haven't gotten started. In any case, you can come to us via this tool, the Portfolio Advisory Service on our website, and you can then, go through, let's say, the risk profiling questionnaire and request for advisory services from our small investment advisory team on what you can do to get started, basically, based on your risk profile, based on your financial goals. So what I'm talking about here is, let's say, if you're someone who, based on the various questions we have, you are maybe a balanced kind of investor, and you're looking at, let's say, 5 years time horizon in terms of how long you can be invested in the markets, whether you have your emergency funds met, things like that. So then, you can then liaise with us, with our investment advisors, on what you can do for your portfolio. The other second point here is, of course, for some of you, you may not actually have passed the CKA, the Customer Knowledge Assessment, which is a regulatory requirement before you can start investing in unit trust. So if that's something that you haven't so-called cleared, the CKA, then you can also then come and make use of our features, come to talk to us, our investment advisors, to then go through this step of getting started, even though you haven't cleared CKA. So it can, for a newbie investor, it can get a little bit complicated at times, to get started. And this is why we have actually created something in December 2016. We call it the FSM Managed Portfolio. So it's a discretionary portfolio managed basically by our portfolio management team in-house. So what they do is, we have a few portfolios that they manage, and it's essentially, very simplistically, it runs from conservative all the way to aggressive, and somewhere in the middle you have your balanced kind of portfolios. And for clients who feel that they just want to get started in a diversified portfolio without having to think about the products to go into, they want to leave it to our portfolio management team. Well, essentially, this is the service that will appeal to you. And in terms of finding more information, it's under Managed Portfolios. You'll be able to find some of the commentaries, some of the outlook from our portfolio management team, as well as the fact sheets on our website. I'll run through a little bit more about concepts that I just mentioned in terms of the risk profile later on in my research portion of the presentation. So the other related service on a so-called discretionary level would be the cash solutions that we have. So of course, firstly, there's this very simple, the cash account that we offer to investors. So it comes in various currencies. So Sing dollar, US dollar, Hong Kong dollar, those would be the most popular currencies used by our clients, simply because those are also related to the exchanges that we offer to clients in terms of stockbroking. And you do recall as well at the start of my presentation that for stockbroking service, you need to pre-fund the account first before you can start investing. So there's no contra services here at FSM. So you can do a fast transfer, let's say, from your savings account at the bank into our Sing dollar cash account. And you can also make use of our FX conversion service if you want to, let's say, switch your Sing dollar in the cash account into another currency. So that's another service that we have on our website if you're looking at using our live FX conversion. So that's essentially a snapshot of the currency or multi-currency account service that we offer to investors. The other service that we offer to investors is the Auto Sweep account. It's a relatively new feature. It's coming close to 1 year old. We launched it in June last year. And we launched it because we felt that it can first of all give a better kind of return on your idle cash, because not all investors who put money into the cash account may use 100% of it right away, because maybe you transfer some cash, let's say, into our cash account, you invest a little bit of it into unit trust, you trade a little bit of your cash account money into, let's say, buying into a SGX listed stocks or ETF. But at the same time, what we offer to clients on the cash account on the Sing dollar, for example, is 0.4% per annum. So you do have some return on your cash account money. But on the Auto Sweep, we give you a better yield. In this case, net yield of, let's say, about 1.08% per annum. This yield we update on our website every week, so it's pretty transparent. What it invests into is essentially a couple of funds, essentially money market funds. So it's two funds from Lion Global and Fullerton Asset Management, so two fund houses. So about 85% of the Auto Sweep is invested into those two funds, and about the 15%, the remaining 15% is in the Sing dollar cash account. So it's currently available only in Sing dollars. And why this product is interesting for clients, for you, is that, well, compared to the Sing dollar cash account that we offer, which is giving you 0.4% per annum, this projected net yield is about 2.5 times higher. The other important feature about the Auto Sweep is that it's not just putting your idle cash to greater use and giving you a better return. It's also available as a payment method for you on all investment products. In other words, you can make use of the money in the Auto Sweep and buy into a unit trust, buy into a stock, buy into an ETF, and just like using cash. So there's no delay in terms of the processes as well, which is very important for us as investors, because we don't want to have to wait to move our money from the Auto Sweep, for example, into a stock that we want to buy into. And in the case of the Auto Sweep, let's say you are trading in the US market, you don't need to convert the Sing dollars in your Auto Sweep to, let's say, US dollars. We actually do the FX conversion for you if you're looking to use your Auto Sweep Sing dollar money to buy into, let's say, Facebook, which is listed in US dollars on the US market. So that's the other convenience of the Auto Sweep. So I think I kind of covered mostly the investment products in a nutshell so far. So the other thing I would like to talk about here, it's some of the other services that we offer to you. So one is the insurance products. For us, we tend to focus on the more simple kind of products. So you're not going to find, the investment-linked insurance products, for example, here, because we tend to find that to be an expensive product for clients. So here is simple products, which is, in other words, like term insurance products, because we tend to believe more in the merits of investing your money. And then, if you need coverage from insurance, then term insurance does give you the kind of sum assured, which can be quite high for a lower premium compared to, let's say, investment-linked insurance product. So these are some of the participating partners that we work with. We also have, of course, your more general insurance products, your PA kind of products, which is, your accident plans, your personal accident plans as well. So that's maybe one feature you could look at if you're interested to look at insurance. The other related kind of a service that we have, the next slide essentially is a summary of what I talked about just now. And you can email us, of course, if you want to find out more. The other related service, just to wrap up on some of the services we have, is estate planning service, which is also something quite new that we have started to offer since last year to investors. If you're looking to, look at customization of wills, having your trust services done up, or even lasting power of attorney. So these are some of the services that we also offer, and we have the email address here of the team within iFAST that can help you on this. So I'm going to wrap up with something that is very core to us as a platform, very core to our mission statement. Recall I shared with you that our mission statement is to help investors invest globally and profitably. So it's really essentially the research ideas. So I'll just go a little bit more in depth in this last segment to wrap up my presentation tonight. So we have a dedicated segment on research on our website. In the main menu bar of our website, you'll find research, and under research, you'll find the various things that I talked to you about just now. For example, recommended funds, the ETF focus list, the recommended bonds, the stock thematic portfolios as well, and all the various ideas. Ideas are essentially the articles that are written by our analysts, and we do write quite a lot of articles on a very regular basis. So you can find all these materials online, for you. Hopefully, they will be of use for you. And I'll just talk a bit about, how maybe we can get started as an investor. Even for me, of course, those are some of the ideas that I've learned over the years, and I'm still learning as an investor myself, even today. So some of the investment ideas I want to share here are just free ideas, just to keep it a little bit more simple. So one is timing is a risky affair. I'll talk about why. A second point here is diversification and rebalancing, and the disciplined approach to investing via a regular savings plan. So timing is a risky affair. So I think for us as investors, even for myself as an investor, when I started off working over 15 years ago, and I had my first paycheck, and I wanted to start investing. So of course, when I started investing, I tend to have a lot of confidence in my ability to time the markets. And of course, over the years, I've learned that that is a mistake. I've paid expensive lessons, or expensive prices for my tutorials for thinking that I'm actually smarter than the market in terms of timing. Essentially, what I'm trying to say is that it's very hard to time my entry level into when to buy and when to sell. And Peter Lynch, of course, is one of the more famous investors. He used to be a very famous fund manager from Fidelity in the 1990s. He's also an author of a few investment books. So one quote he has here is, "Far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves." And there are a few examples that I can use to support this point. So one example I shared with investors at the start of this year when we had our investment expo was, if you look at last year, 2019, you'll find that a lot of the equity flows, right, from the market, in this case, more of the US market, a lot of the flows were actually outflows, meaning that a lot of the investors are actually pulling out money over the course of last year because the mood perhaps last year was quite pessimistic in terms of how they look at the market outlook. But of course, with hindsight, we know that over 2019, the markets have been doing pretty well, and most markets were positive over 2019. And the other chart I have, or the other visual I have here, it's sometimes there's a lot of wisdom in the saying that time in the markets actually beats timing the markets. So if you had missed out, some of the best days of the markets, let's say the top 30 days that a certain index has in the market. So if I look at S&P 500 for the US market, if I had missed out on the top 30 days, my investment portfolio, which is maybe worth $10,000 to start with in the year 1998, for example, in the 1988 in this example, the amount that it would grow to till the end of last year would be very little in comparison to me actually staying fully invested throughout those 30 plus years. And it essentially tells us that if we miss out some of the best days that the markets have, well, we would miss out on the returns, obviously. The downside to this is, of course, if we stay invested all the time, right, it can be quite painful for us to see the markets go down, our investments go down, and of course, our portfolios go for the sea of red, which, of course, I've seen that in more recent times in March 2020, when global markets went through a downturn very fast and in a very fast and furious manner. But if investors had actually sold out from the markets, let's say in early March or middle of March, thinking that the markets could continue going down, they would have, of course, missed out on the quick rebound from end March onwards. And of course, a lot of the markets, including the US markets, are still rallying in the last few weeks. So that's a problem, I guess, with us trying to time the markets in terms of when to sell and when to buy into. The second point here in terms of investing strategy is we like to talk about managing a portfolio like managing a football team. So I think for many of us, we are perhaps football fans. Or at least maybe we do watch a certain sport, and I guess for many sports, especially team sports, it's very important to have a diversified approach to it. What I mean is you have to cover the entire field to make sure that you can't just have top strikers scoring goals. If you want to succeed, you also need to have a good defense. You also need to have a good goalkeeper in the back. Make sure that you're not conceding goals. You also need to have a good midfield in terms of creative midfielders, in terms of the defensive midfielders. So here, I give an example of the core and supplementary, which I shared with you just now earlier. Core could be 80% of your portfolio, supplementary 20%. So if I look at this football pitch, so core could be, let's say, your goalkeeper, your defense, and your midfielders, and your supplementary could be your more exciting ideas. That could be your strikers. And you try to keep the exciting ideas to a smaller part of your portfolio. And the key reason is because the tactical plays, while they are exciting, they can also be more volatile. So it could be quite risky, therefore, if we have, let's say, 80% in the supplementary part of our portfolio and just 20% in the core part of our portfolio. So that's a bit of covering the entire field kind of idea here. The second idea here is to review the strategies. So related to this point is rebalancing. We tend to advise to our clients to rebalance at least once a year. So let's say, I start off with core and supplementary, and I have a certain proportion into Asian bonds, healthcare, US equities. And in 1 year's time, I would then look at my portfolio and I would try to see which funds have done better. And I'll try to take more profits from there and reinvest those profits into those that have underperformed in the last 1 year. And just to go back to my previous asset allocation that I wanted to start with, and rebalancing then helps my portfolio to go back to the kind of asset allocation that I wanted to start with in the first place. The third point here is to switch the players, because I think in the investment world, things are dynamic, things change all the time. So one example, in-house for us for the research team. So we were always looking at China equities as a kind of supplementary portfolio for many years. But of course, over the years, we also then find out that the importance of China cannot be denied. So as a proportion of its contribution to GDP, China used to be just a small proportion, just a few percentage points contributor. But as of today, it's an important contributor to the global GDP. We're talking about GDP of 15% or thereabouts from China alone. Is this an important part of the global economic engine? The answer is definitely yes. And what we then did was to then tell investors, we think China should be part of the core part of your portfolio as opposed to supplementary. So that's one of the things and ideas that has changed for us over time. Second idea that we have implemented in more recent times is the importance of the digital economy. Not just because of what we have experienced with COVID-19, but of course, even over the last couple of years, the importance of some of these companies in terms of their contribution to the digital economy is very important. So if you look at the top companies in the S&P 500 in terms of the market capitalization, essentially these are technology companies that have a very asset light, they have a very digitalized business model. I'm sure you know the names. And therefore, we felt that we needed to recognize the importance of the digital economy, and we then have it in the core portfolio. So these are some of the changes that we do over time for ourselves as well. So just to maybe put into a bit more, numbers in terms of what I was trying to share with you. So the asset allocation part is essentially to keep the portfolio diversified. We don't want a too risky portfolio. So the first point about asset allocation is, of course, the inter-asset allocation. So essentially here, that's the top table, is asset allocation between equities and bonds. So we're talking about conservative portfolio all the way to aggressive. So conservative, currently, we tend to say you should have about 17.5% in equities, then the remaining in bonds, because, for investors who have a conservative profile, then they tend to be a bit more risk averse. On the other hand, if you're a more aggressive investor, we tend to always say, even if we're very positive on the equity markets, you should still have at least 10% in bonds, and the remainder, of course, in equities. And if you're somewhere right in between, then you're a more balanced kind of investor. So usually the neutral asset allocation for a balanced portfolio is 50-50. But because, we tend to be a bit more positive on equities outlook versus bonds at this point of time and at the start of this year, so we tend to have a few percentage points more in equities. So just to put all that into examples, so if you go into the fixed income part and the equities part, so just now the equities part, I shared a bit more about the digital economy, the China part forming an important part of your, your core equity portfolio. So you can see that covered in our portfolio asset allocation. So that's the intra asset allocation, which is within equities on the one hand, and fixed income then is within fixed income. So within fixed income, you have the likes of global bonds, the Asian investment grade bonds, the global or US high yield bonds, and so on and so forth. And within fixed income, then generally the more safer type of bonds would be your Singapore centric bonds. So I think for us, for all of us, I think when we get started in terms of investing, I think one very important point here is what are we investing for? I always like to ask investors when we start talking about building a portfolio for the longer term. Are we investing, let's say, for retirement? Are we investing for the kids' education? Are we investing for, let's say, this pool of money that I would like to set aside because I intend to buy a house in the next 3 to 5 years, and so on and so forth? Because I think sets the life goals that will guide us in terms of why we're investing. And that's very important because the life goals always keep us rooted in terms of what we should be doing. And hopefully it keeps us rooted in the long-term objectives of it, and not so much about what I should be doing in the next few days, in the next few weeks. In terms of the making changes to my portfolio. So I have a quote here from Benjamin Graham, again, often referred to as the father of value investing. So the investor's chief problem and his worst enemy is likely to be himself. In the end, how investments behave is much less important than how we as investors behave. So this is really talking about the emotional part of investing, because a lot of us, we cannot remove the emotional part of investing away, because we're all emotional creatures as human beings. So when markets fall, we tend to worry a bit more. We tend to panic a bit more if markets go through a downturn very fast, like what we saw in March. And we then may make decisions which may be very short term, which may not be necessarily the right logical decision in terms of meeting our investment objectives. So I think here I wanted to say that one way to remove all these problems with emotional investing is to have the regular savings plan in place. Every month, put in a dedicated sum of money into investing. It removes the emotional part. It removes the guesswork part in terms of whether I should be investing now or I should delay it to later next month and so on. And of course, a regular savings plan allows us to enjoy the power of compounding. If you're especially putting every month money into your investment, that's one way of looking at the compounding effect. The other way is, of course, if you're investing into a dividend-paying fund and so on, every time you're earning the dividends and you're reinvesting it into the investment, then you're enjoying the power of compounding as well. So for unit trust, you can actually reinvest your dividends. Today on the platform, we don't have the reinvestment of dividend feature for ETFs, but of course you can opt in into the auto sweep to reinvest your dividends from ETFs into the auto sweep. And in terms of what you can invest into on a regular basis, you can do it for unit trusts, which starts from just $100 a month. For ETFs, it's $50, even lower. And for MAPS, which is the managed portfolios, it's $500 a month. I showed the RSP calculator here. It's a tool that I like to make use of a lot, because I like to play with the numbers, because I can put in a monthly RSP amount. I can also put in, let's say, some investments that I may already have, and then I choose the holding period, 5 years, 10 years, and so on. And depending on the kind of annual return, let's say 2% per year, 4% per year, 8% per year, I will then see how this investment will grow into. So it gives me a certain idea of where my investments can grow into in terms of the dollar amount. So that's one tool that I like to use a lot. So we have it on our website as well. And this part, I won't really maybe go into this part too much, but essentially, again, our research team ran through some of the numbers throughout various actual crises in the past, and showed you the differences between not having an RSP and having an RSP. Essentially, the lesson here is, if you have an RSP and you go through an economic crisis in the past, you will actually manage to break even much faster than actually not doing anything in terms of your investments. And that's, I guess, a result of how RSP can actually benefit us, especially when markets are volatile, and especially when markets are going through a lot of topsy-turvy kind of volatilities and downturns. Usually you'll find that RSPs do really well in this kind of economic situation. So having said that, that's one argument you will hear a lot. Having said that, I also feel that even if markets are not going through a lot of volatility, I still find that I would want to do an RSP, and this is something that I myself do every month. And I do it because simply it just removes the emotional part of investing for me. So I'll just wrap up with a couple of tools that we have on our website. I shared with you the RSP calculator, so I won't really touch about what this tool does for us. But the other tool we have on our website is a retirement calculator. And the retirement calculator allows you to also make use of various permutations. It's also on our website to figure out, how much you need to save for your retirement, assuming you want a certain amount of money during your retirement days, because you want to, have a certain lifestyle. So let's say you want to have every month $5,000 in your retirement days, and let's say your retirement days can start from the age of you're 65 years and above. So how much then you can start investing today? So those are some of the features you can make use of on the retirement calculator on our website. I'll just share some of these features that I've been talking about on our website so that it's a bit easier perhaps for you to see where they can be located or found on our website, the FSM homepage here. So if you look at the homepage, some of the tools that I was running through. So if you look at, let's say, new to FSM and regular savings plan feature here. So I talked quite a lot about regular savings plan. So under the regular savings plan, you'll be able to see the various kind of products you can invest into via RSP. So there is firstly, of course, the unit trust. So you have over 1,200 unit trusts to choose from. For ETFs, you have over 40. So in this case, it's 49 ETFs to choose from the various exchanges. And also for MAPS, you have about 10 portfolios to choose from. So, if you're looking at, let's say, the ETF RSPs, so if you're looking at the thematic RSPs, you'll be able to see the various RSPs here that you can, use an RSP to invest into. The RSP calculator is, of course, the other feature that I talked about. So let's say you want to invest $100 a month, and let's say you have, $10,000 that you have invested somewhere, and you're looking at investing for the next 10 years. So you'll be able to see just graphically, your estimated return in 10 years' time based on various assumptions. So if it's an annual return of 2% all the way to 12%, where would that investment then be worth? So if you're looking at the various permutations I inputted just now, so if you look at, let's say, 8% annual return, you're looking at this portfolio growing to $40,000 at 8% return in 10 years' time. So that's that gives you a certain idea of where my investment can grow into for you, and you can play with different permutations here. So that's one feature. The other features that I've gone through quite a bit in terms of the cash part. So under cash, I talked about the cash solutions. So of course, you can go into the cash solutions part to just understand the multi-currency cash account, to understand the auto sweep account as well. And of course, under here, you can also understand the making payments part. So if I click on making payments, for example, I had a screen grab for you just now. And of course, we then show you how you can actually make payments from the various banks that maybe you have a savings account with. So for example, if it's DBS Bank, so you can actually, input these various details. So the cash will have to go to iFAST Financial, and the recipient bank, we use a Standard Chartered Bank in this case. Don't forget to, of course, always put the command part, which is your FSM investment account number, because we need to know when you make the transfer from your savings account into our cash account, for example, we need to know that you want the money to be inputted into which account of yours at our site. So our FSM investment account is always, of course, the P something. So if you log into your account, you'll be able to know what's your investment account number. So don't forget, this part is very important if you want to have a very swift transfer, which is seamless. So that's a bit on the the cash part. On the bonds part, I talked quite a bit about the recommended bonds part. So if you click on recommended bonds, you'll be able to see some of the bonds that you can invest into, and you have the report here. And the same goes for funds. You have the recommended funds here. For stocks, I talked about the thematic portfolios, where you have your digital consumption kind of a team, you have your millennials team, and if you click on it, you'll be able to then see some of the stocks that our research team has highlighted. So those are some of the examples. And same goes for the ETF focus list, and so on and so forth. So those are some of the features you can find on our website. Perhaps I probably won't go through everything. So I think I'll wrap it up here. I'll just invite Jonathan at this point, perhaps.
Yeah, thank you so much, JP, for taking the time. And also want to thank all of our attendees. Thank you all for staying with us and listening so attentively. We hope that this evening has been helpful in helping you to learn about FSM1.com. And we wish you all the success in your investment journey, as well as a pleasant evening. Thank you, everyone.
Yeah, thanks, Jonathan. And thank you to all of you. Stay healthy and safe. Goodbye.